I'm Edie Lush. I'm here, the executive editor of Hub Culture. Really pleased now to be joined at Transition Forum online by Kanini Mutooni. She's the managing director at Draper Richards Kaplan Foundation. Welcome, Kanini.
Thank you very much, Edie.
So you focus mainly on investing for impact, and I'd love to know, COVID-19 has definitely increased the need for investing with impact. But do you see that it's increased the desire for people to invest in businesses with a purpose?
Yes, thanks for that question. To be honest, once the real impact of COVID started to hit, we as investors all imagined that the first sort of asset class that would experience the biggest capital flight, if you like, would be sustainability and ESG. That was, to be honest, that was my expectation. But we've been completely surprised by what has actually happened. Now, obviously, the data that we have only covers sort of like the first 3 months of 2020. But just looking at that data itself, we're already starting to see a significant shift in investor attitudes. So, for example, if you look at the amount of capital that just came into impact funds in that period of time, it was actually up 40% from the same period last year to about $40 billion. Yes. So that was the first thing that really caught my eye as, an individual who has been, talking about this space for quite a number of years. That's the first thing. And then the second thing that we've started to see is BlackRock actually did a really interesting piece of work in terms of trying to see if there's a correlation between sustainability and resilience of companies. Because obviously, once COVID is over, if that ever happens, it's likely that a good chunk of organizations and companies will disappear, will die, will just completely cease to exist. But what the BlackRock report started to see was that companies that had a focus on sustainability, so for example, being more focused on board effectiveness, having a really effective board, putting in place gender policies, focusing on gender pay gap, focusing on stakeholder support and stakeholder effectiveness, focusing on employee engagement and well-being. Those are the companies that seemed to be really resilient during this period in time, which to me says it's no longer about just doing good for the sake of it. We're actually starting to see a positive, almost if you like, return from both a financial and a social perspective that's coming through for companies that have taken this much more seriously. So I think for me,
oops, sorry. Sorry, go ahead.
No, please. No, I was just going to finish off by saying it's almost it's like a validation of what we've been trying to say for the last 10 years.
So it's interesting that those are the companies that look like they're going to last. What about the performance of the mainstream stock market against the sustainable investments market?
Great question. Again, the data that we have is obviously just until the end of the first quarter. But when you start to look at the numbers, what you will see is, first and foremost, the way public markets work is that they're very much focused on the future. Public markets assume in the first instance that, governments will have their stimulus programs and we're all going to be fine. So that is, the public markets are very future looking. I think that's an important piece. But I think, stepping aside, when you actually started to look at the numbers, we found that there actually isn't what we call a return trade-off between putting money in a mainstream fund or putting money in an impact fund. We're starting to see some really positive risk-adjusted returns from those funds that were focused on sustainability. So what that means is that you're not going to lose money because you've made a decision to invest to generate profit and social return. Absolutely not. There actually is a positive risk-adjusted return that you're going to get as well. Now, I can say this with a lot of conviction, to be honest, because I've seen the numbers for this quarter. But what would be really great is to look at the numbers in the next 18 to 24 to 36 months and hopefully see that trend is maintained. But right now, I'm just really excited by what we're seeing.
That's really interesting. So I imagine you've been keeping busy during these last 3 months of lockdown. Tell me what you've been focusing on.
Well, firstly, I'm a mother of three under 10 years old. So
Crumbs.
I have been, yes,
My
I've
sympathy.
been, yes, thank you. Thank you. So, I mean, from a personal standpoint, to be honest, I have recognized that as an impact investor, I need to take education as a theme much more seriously. And not just
Mm,
education in itself, but innovations around education. We really should be focusing on deploying capital to deal with situations like this. The online
mm,
platforms that we have, we need to improve those to improve teacher, student, and parent engagement. And to be honest, I hadn't really sat down and thought about that before, as I am doing
mm,
now. But going forward, I will be looking at investments that really support education that may necessarily doesn't necessarily have to be face to face. Innovation and online education. That is something I have decided has to be a focus going forward.
Well, I really
I think the
support you in
second thing
doing
I've
that because as a mother of three who are a little bit older, from 12 to
right.
17, I can say that there's a lot to be improved.
Exactly, exactly. And to be honest, Edie, I've talked to other mothers, other parents, and it's a collective sigh of anguish right now of maybe also not having
Mm,
realized just how much our teachers in schools are able to do for our children that allow us to work and to fulfill our mission. So it's really taught me a lot over the last 10 weeks. I think the
mm,
other thing that I've been spending a lot of time doing is, health is obviously something that I've always had at the back of my mind as, a key area of focus to deploy capital to. But what I'm starting to see is, and this is not just emerging markets, it's developed markets as well. I think there are a lot of vulnerabilities that we really hadn't seen pre-COVID. We really
mm,
hadn't seen them and we hadn't recognized them. Public health systems is one of them. The second thing is just the fact that we haven't really focused on, helping people who we consider are below the income level, the normal income levels
mm,
within the Western democracies. We really haven't focused on those. And what COVID has done, it's thrown open these vulnerabilities in a sense that has been really shocking, but they were always there. So, what I'm
mm.
going away with is saying that if I claim to be an impact investor, I think we really do need to focus on these hidden vulnerabilities that we really haven't been seeing, haven't been focusing on, but we really do need to start deploying capital to those sectors as well. It shouldn't just be the sexy stuff, the stuff that everybody's looking at. It really should be those areas that are hidden, those individuals, those families, those communities that we really haven't been spending sufficient levels of capital and have just not had enough conversations about as well. So well, my personal sort of intention is to do that and to think about that going forward.
Kanini, thank you so much for joining us here at Transition Forum Online. I'm Edie Lush from Hub Culture.
Thank you so much. Thanks for having me.